Hello, I'm Deborah Malone, founder of The Internationalist and host of Internationalist Marketing TV. Today's guest is Brian Wieser, principal at Madison and Wall. Brian, it is always a pleasure to spend time with you. You always leave my head spinning after our conversations. So let me start with that and say welcome to the show.
Thanks. I hope to make your head spin even more.
I'm sure you will, but it will be spinning in a good way, I think,
I think
because
so.
yeah, I do too, because you've just released some wonderful information about U.S. ad growth, and you've revised your forecast not only for 2024, but even beyond. But let's start with 2024. Okay, why? Why is the U.S. going to be up?
Yeah, well, first of all, I was already expecting, let's just say, a pretty good economy and a pretty good ad market going into this year. Anyone who was following what I was putting forward when I was at Group M, going back a couple of years, we were kind of mocking the idea that we were going into a recession. Uh, and it's like people ignored the weirdness of the pandemic. They were using all these rules and simplistic ideas around why necessarily it followed that because you had interest rates that were high, it would follow that you'd have a slowing economy. Those two things don't necessarily happen. It does happen to be the case that if you cut interest rates in a good economy or in an economy with good underlying conditions, you probably will juice it more. And so, if nothing else, we do have conditions that are in pretty good shape for acceleration because of that. That's to be sure. But I think more generally, we have a couple of things. One, we have a good economy. It's probably getting better on most metrics that most people would probably care about. At least it's beating where lower expectations. The second thing that I don't think people fully appreciate is the cross-border activity that goes on, meaning the advertising that comes into the market from outside of the United States. It's primarily China, but not only China. Vietnam is another source. And that probably is adding a couple of extra percentage points to growth. And it goes way beyond Temu and Shein for those who are following those two companies or businesses. It is a pretty broad issue. It's benefiting not just Meta, but Amazon as well. And it's those are there's nothing really getting in the way of that growth right now. That's not to say there's not risks, and I do capture those risks, I think, in the report.
No, you're right, and I do think that people overlook that cross-border element. Of course, the internationalist would not, but it is pretty amazing, and I hope to get into some of this later. I realize that you're looking at all advertising ex-political, and maybe we'll touch on that in a little bit. I just want to make sure we're comparing apples to apples, as we look year to year. But also you know you also talk about this as a wonderful trend through 2028, and I only ask about it because often when I talk to marketers, you're still hearing these lingering concerns about economic uncertainty and geopolitical issues, and maybe that's more based on how they communicate within some of those issues, but there still is some lingering feelings on the part of some marketers. So it's wonderful to see that people are still spending.
David Ogilvy once had a line that went something along the lines of people really do what they say what they think, or think what they feel. And what people feel is not what they're doing. And what people are feeling may not be rooted in reality, right? The way we process information, the way we perceive it is informed by a lot of things. Facts are only one factor. um, the reality, the objective reality, is that economic conditions are good. It's also true that most people feel terrible about it. It's I mean, you can look at sentiment surveys and all sorts of for among consumers, no less among marketers. And when you hear CEOs of companies or CFOs of companies saying essentially what you just said, saying macroeconomic uncertainty, risks, geopolitical issues, blah, 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 are causing our results to be weak. It's not that they're not hearing their clients say that that's why they're reducing spending or not increasing spending, but it's factually not correct that collectively they're not increasing spending, right? And so we have to be able to separate those two things. I think that, coming out of the pandemic, I think that, and really paired with the let's call it post-Trump, post-Brexit kind of world that we're in, a lot of what we thought we knew about how the world worked was kind of upended. A lot of the way that a lot of people thought the world worked, I think, was upended. Not everyone, but and I think that when you layered on the pandemic and you layered on inflation that most professionals had never experienced in their working lives, and you layer on a couple of land wars that are, top of mind, I guess, in a way that wars, in other places are not. I think that that all creates these um, negative vibes, for lack of a better word, and so you see it playing out in context of popularity of the current president. Again, just an objective reality. The economy is good, and yet you have to triangulate that with perceptions of it as not good. Okay, so we have to deal with that. But at the end of the day, consumers can hate spend all day long. Advertisers can hate spend all day long. They can like say that I'm really concerned. Pardon me, will I go and cut a
Yeah.
check for a few $1 million?
No, you're right, and it I think what I'd like to do now is let's talk about as you project out pretty positively for the U.S. through 2028. I'm assuming regardless of what happens in the election. Let's talk about that, and then you mentioned something really important, which was that risk opportunity element. So let's look at both of those.
Yeah, I mean, the underlying conditions for advertising are generally positive, with a skew to the upside relative to historical trends. One of the factors that also underappreciated, uh, even I underappreciated this in the last decade, was that uh, if you look at, say, e-commerce based retailers, they spend approximately 4 times the amount that a non-e-commerce based retailer spends on advertising for every dollar of revenue they generate. That means as e-commerce goes from 15% to 20% to 25% to 30% of retail activity, you get a meaningful boost in total advertising spending as we track it. And it's also the case that in other categories that effectively replace traditional non-digitally centric ecosystems, you also have higher intensity. For example, in the we've seen for a long time in the travel sector, right? The likes of a booking.com and Experian, et cetera, they almost certainly spend more money per dollar transacted than, say, traditional travel agency. I don't have hard data on that, but I suspect it's true. I do have hard data on the e-commerce versus retail, traditional retail thing. And I think that that continues through the decade and continues to add that incremental boost above and beyond just normal-ish growth.
Now, you just how you're defining e-commerce is any brand that goes direct to consumer. Does that also include retail media, or how are you defining that?
Well, let's be
Anyone?
clear.
Yeah.
Here I'm talking about e-commerce based entities as buyers of advertising, not
Hmm.
sellers.
Hmm. Hmm.
This as sellers of advertising, they may be generating some incremental money. It's not clear that they do, right? It's not clear that, there is some trade money that comes from manufacturers into what we'll call retail or commerce media. But all the work I've done over the years conveys that it's not a huge share. It's certainly not driving the bulk of the growth. I'm not saying it's not zero, but it's not a huge share. The most marketers have a hard separation between trade budgets and their advertising budgets for legal reasons. The Robinson-Patman Act first. That's not to say there's not influence, but they're mostly very separate. And so budgets for advertising are what they are. They are determined independently of the relationships that they have with with retailers, whether e-commerce or not e-commerce based, and they allocate a growing share of their budgets to these channels because, well, for a number of reasons, but it doesn't change the total pool of advertising money. I'm focusing more on Amazon, the marketer, Wayfair, the marketer, uh, you know,
Right. Or as you mentioned, the booking.com or any of those, the
yeah, the
digital
digital
entities
endemics.
that don't have the brick and mortar necessarily.
Exactly. They are
Yeah.
just more intense as advertisers, certainly.
No, that's interesting. And it'll probably change a lot of the rankings that we have of some of the top spenders.
It already
Um,
has. I mean,
yeah.
Amazon is by far the biggest marketer on earth right now.
No, it is extraordinary, and it's also extraordinary how quickly that happens. So that's a factor that you said, and I hate to say that we talk decades, but you've mentioned that I don't know that you've underestimated, but you've certainly seen the rise in spending. What about this risk opportunity that you mentioned? Is that more related to
Yeah.
geopolitical, or is that what's that?
Well, yeah, there are, and specifically, to the extent that Chinese based export marketers are driving a lot of extra growth. I mean, it's probably an extra percentage or two of growth is solely from incremental demand from for advertising from China going into the United States. And it's hard to say, but it might be 5 to 10% of all advertising activity in the US comes from these companies, right? It's a big number. And and so the risk is what happens if you forget about who wins the White House. The trend towards decoupling is bipartisan. It has bipartisan support. And so for better and worse, and I think internationalists would probably argue for worse, but it is the reality that I think is playing out. Does if we actually get to a place where trade is meaningfully impacted by higher tariffs, or if other factors like discounted shipping based on rules from the 1890s around what constitutes a developing nation, if that changes, if rules around personal exemptions change, basically becomes really expensive to ship. Uh, those are factors that could, play out too. And so I don't think you should assume it's a given that all this money stays in the market. Now, I don't take as my base case that it goes away, but I'm saying it's a risk. And so on the one hand, we get this upside potential because it's still a growing market. It's still like there are still manufacturers in not just China, but Vietnam and elsewhere who are realizing, hey, wait, I can look at a product that's selling well in a digital channel. I can cheaply manufacture a version of that, and I can use digital targeting to sell to those individuals, and then I can get it fulfilled by whether it's Amazon or whether it's another third party, Timu as a good example. And so there's, again, there's opportunity and there's risk.
Does the Key Bridge disaster factor into any of this, or is that just in terms of supply chain issues, or
Well, I obviously that only
probably
happened
two?
after
Yeah,
I
yeah,
published, but
yeah.
no, I mean, of course, there can always be these unexpected situations. Certainly, remember the Suez Canal getting blocked for a period. These tragedies can always occur and have some consequence. It's usually difficult to point to singular events like that, and as in terms of having an impact on the ad market. It takes something, unfortunately, like a 9/11, where you could see unambiguously there was, yeah, advertising just stopped. And it's pretty rare, like even with the pandemic, like the very beginning of the pandemic, advertising didn't really stop. It just kind of kept going. And obviously it did pause, it dipped for a minute and then took off like a rocket.
Right, all with the
Uh,
same message, of course. But yes, we're there for you. Yeah.
yeah, and so it's pretty rare. And again, just thinking around the world, like you need it takes something as extreme as a country effectively being at war, and even then, it's only during the start. It again based on what I've seen of this around the world, where you would have like a noticeable, meaningful impact on the ad market. For the most part, the budgets are what they are. They're set independently of, again, supply chains get messed up. Well, it doesn't necessarily impact advertising. We did see during parts of the pandemic that definitely there were some packaged goods companies who, like, literally they could not get their goods into stores, and so they attempted to pull back whatever advertising they could. But these were like serious long-term disruptions. Long-term meaning like over the course of like 2020 and 2021. You didn't need to do, and the other thing is you also knew you didn't need to advertise toilet paper because people were stocking up on whatever they could find.
Yeah, you're right. Well, I'm wondering now if we should just touch on the international picture before we go to some issues of media, because I'm always intrigued by how, your forecast for individual media. But how does the rest of the world or certain key markets compare to the US in terms of what you're seeing with growth?
Yeah, I mean, well, economic conditions aren't necessarily as robust as the US. Advertising conditions usually are, and it's a lot of the same factors. We have the e-commerce transition is playing out in most places around the world, and I think you get that same kind of ad intensity bump. You do have cross-border advertising trends going on. It's interesting. We can see this most visibly in data that Meta gives us in terms of, they have this distinction between ad revenue attributable to consumers and ad revenue attributable to billing addresses of advertisers. And the gap between those two numbers in different regions tells us quite a lot. I do wonder if, there's not any meaningful gap in Europe. And I honestly wonder if, like, is there maybe an Eastern European equivalent to this where, there's cross-border spending going on in that sense, like still within the EU, and including the UK, but it's harder to see the impact of this Chinese activity in Europe. With that said, data we can see, or that Marketplace Pulse and others have published about the merchants on Amazon and the share which originate in China, are really high in some markets like Spain or Italy. And so it's inevitable that a large share of spending on advertising then is also originating in China in those places. And so you can have a situation where you've got, again, weak economies, but strong ad markets. This is a bigger point, and it's going back to, how I've had to revise my thinking. As I started doing this kind of work at Interpublic in the early 2000s, and really building on the legacy that Bob Cohen established at McCann Erickson, the understanding was that economic activity and advertising were correlated. And through the 2010s, we started to see a real decoupling. And it's pretty clear now that, I mean, a positive economy is helpful, but far from the only factor. And I think that, we can say there's a negative correlation between economic activity in a place like China and other markets around the world. Because if opportunities for manufacturers in their home market aren't good, it may incentivize them to find ways to work in other markets. And it kind of blows up any model you might have thought about with respect to the relationship between economic activity and advertising. So when we think about other markets, we can point to these two similar trends. Again, the creative destruction that's playing out around the world. No, not the end of J. Walter Thompson. I mean the idea that new businesses with different characteristics replace those who came before them, paired with cross-border activity. And those two trends are really benefiting most countries around the world.
Um, Interesting. I don't mind me. I was just taking a note on your 2 points there. Um, so have you seen this before, where there is a weaker economy and positive advertising spend? Have you seen
That's what
that
I'm saying. In
before
China,
in your no, but I mean, in the 20 years that you've been or more that you've been looking at this,
yeah,
have
no, I
you
mean, but this
seen
is the
these?
thing.
Yeah.
China is the weak economy, and that's
Yeah.
part of it.
Yeah.
Like
Yeah.
that's one of the reasons why we're seeing so much extra activity. The home market is not as desirable.
Interesting. That's interesting. What about in other countries?
It's just, I mean, it's hard to say, like, because we
Yeah.
don't know how
Yeah.
much
Yeah.
activity is coming
Yeah.
from Vietnam. It's the
Yeah.
only, again, all the work I've done on this showed that it's the rise of self-service advertising in the 2010s, in particular with Meta, but also with Amazon and setting up operations and reseller arrangements across the country have been a big factor in this. Again, a lot of this is just anecdotal and based on talking to other people who there's not very many who've also been exploring this topic. So even just understanding that this is a thing in Vietnam is it's hard to corroborate beyond the anecdote, and therefore it's impossible to quantify. But it makes a lot of logical sense that that would be the case, this negative potential for a negative correlation. It's also really tricky because, if as I understand it, it could be at a regional level where that negative correlation exists. So it's not all of China necessarily, but there's a region in China where things are weak. Then the weakness there may contribute to extra growth in another country.
No, no, it's absolutely fascinating. And what I love about it is the objectivity that you bring with it, as opposed to, looking at, tried and true trends and always looking to find something that is absolutely clear and unemotional, about some of these things, because so often, particularly now, there's so many emotional feelings about all of this stuff.
Sure, but
Yeah.
I think let's go back into the 2010s. Like I was certainly, I continue as a working for an independent equity research firm. I was still making the argument that there should be a strong correlation between advertising activity and between advertising and economic activity. And I certainly had a client or two who were pushing me on that, and I was listening, but I'd not seen enough evidence. You get 2 or 3 years where the growth rates are, call it, two standard deviations or more than two standard deviations above what your model expects. The first years you can kind of write that off and say, well, it's just random. But after like 4, 5, 6 years, and then you start to go, maybe the model doesn't work anymore. And so that's when you've got to be open-minded to these things. But it's hard to know when a model doesn't work. But I think, and you go back to the forecasters expecting a recession coming into the post-pandemic period. It's like I would argue that again they're using the wrong models. Like I am not a trained economist. I'm a trained financial professional, but not an economist. But even I can identify when someone's using a bad model. Going to the global financial crisis, when I learned that everyone was using 2 or 3 years of data of housing prices to build the models that they were using for mortgage-backed securities, that's crazy. Uh, but that was kind of obvious, I think, for anyone who understood how the models were built. Similarly, if you look at how economists were saying, well, the rule of thumb is you raise interest rates, you get a negative impact on the economy, or you have when the yield curve is inverted, therefore it means the market says there will be a recession and the market's not wrong. Well, wait, those rules of thumb don't. I don't think they account for all the variables you have to account for. And if only on that basis that that people are using a bad model, take the other side of that bet.
Well, and I mean, just to be simplistic about it, I guess we are still a consumer-driven purchasing economy, as
Mhm.
is more of the world, and people keep buying stuff,
But
and
here's the
and
thing. It is, although these are helpful things, right? I go back to, sure, do you have a stronger ad market in a lower interest rate economy than in a higher interest rate economy? Do you have a stronger ad market where people are buying stuff versus the alternative? Sure. But are they the drivers? Are they the actual modelable drivers? Not really, because at the end of the day, consumers are not the ones who actually buy advertising, right? And that's the thing that I think a lot of people ignore. Now, when you think of a model should be an abstraction of reality. It should be like an impressionist painting where you're putting forward a series of images that leave you with an understanding that's greater than whatever you had before you looked at it. And Excel is just like painting, as far as I'm concerned. So carrying this through, that abstraction of reality should reflect that the budget setters of advertising are not consumers, but corporate entities. Now, as we all know, corporations are people too. However, if they were people described with human characteristics, we call them sociopaths. And so if we try to understand how corporations make decisions and why they make decisions the way they make decisions, it's a different set of logic. The idea that if you have industries which become more oligopolistic rather than perfectly competitive, you probably get more advertising. You go to a more monopolistic environment, like with two or three competitors in a vertical, what happens? End up with less advertising. Doesn't matter what the consumer did, but when you focus on the decision-making processes of those who actually set budgets, you see something that's quite different. So with that said, um, we do see healthy environments with respect to consumers, and that does contribute positively versus the opposite. But again, I think that there are other factors that can be more overwhelming than just what consumers are doing.
All right. Well, as the overwhelm continues,
We
I'm
did
sure.
talk about head
Yeah,
spinning, didn't
we
we?
did, and you're delivering on overwhelm. No, I mean it's just ways of thinking about things. Um, it just not with the common way that most people talk about things. It's almost knee jerk reaction. The way that people, oh well, there's economic uncertainty, so there's where we've got concerns about this and the other. And you're right, when you start to look at what's being spent and you look at, shall we say, the empirical data, and so when you see it very differently. You alluded to obviously e-commerce, you alluded to digital. Um, or commerce media and talk a little bit about the trends that you're seeing. I was a little surprised, for example, that you're seeing some growth in out of home, but then again, out of home is also changing to be quite dynamic. So just talk a little bit about that.
Yeah, well, on the out of home thing, it is interesting. It is the one, let's call it traditional media, that probably is well positioned for the long run. Uh, and so much advertising is so emotional in terms of how corporate entities make decisions. Despite being sociopathic, they do make emotional decisions collectively. And so it's not about effectiveness necessarily. If it was about effectiveness, radio would be a massive industry that's growing rapidly. There's this mix of industry structure, the idea that outdoor advertising does have a heavy concentration in cities and environments where individuals who make decisions can see them, they experience them. There's an experience-based element that still causes decision makers to feel like it's a more effective medium, regardless of whether it is or not. And then you have this, we can call it the Apple effect. Anyone who likes to see themselves as being luxurious or tech driven sees what Apple does and says, oh, yeah, I want to do that. And that I think has been a huge factor. Apple's still one of the biggest buyers of outdoor advertising. And I think it's hard to say, do they cause luxury to want to be an outdoor? Do they cause tech to want to be an outdoor? Or is it that tech wanted to be outdoor and Apple just happens to be one of the leaders in that space? But I think that Apple's impact, it can't be underestimated in terms of causing a lot of advertisers to want to be in the outdoor market. Then you do have these elements that I think resonate with marketers. The idea that there's perceptions of attentiveness which are high. There is a perception of not being able to avoid the ad or skip the ad that, you know, even notwithstanding that, yeah, you can actually walk right by one of these things or drive by. And there's always this issue I'm amused by with respect to outdoor advertising, that advertising is supposedly so effective in terms of causing people to pay attention, but it doesn't possibly contribute to accidents. Okay, one of
Right.
those things may
Well,
not be fully correct. But I think that, and it may just be that there's there are other factors at play. But either way, I think it definitely contributes to the perceptions around the medium are really positive, and I don't see that changing anytime soon.
So what about television, kind of writ large? Now that we've seen so much change in so many aspects of television, what are you thinking about there?
Television is in a pretty bad place globally, not just the US. The creative destruction issue that I've been talking about is a big factor, meaning the marketer that came into existence 20 years ago, or less than 25 years ago at least, has a completely different media mix than one who came into existence prior, right? And so while many of these entities have added television to their mix because there's probably nothing that drives performance like television, it may be a relatively small share. It's not a 60% of budget, it's more like 10, right? So these are relatively small allocations, not nothing, but not massive either. And it's not enough to offset the gradual erosion of budget shares that come from the largest advertisers who used to dominate television, right? So a typical large brand who maybe was 60 or 70% television in their overall budget allocation. And to be clear, my definition of television includes professionally based streaming content, Hulu, Disney Plus, etc. If that budget has been coming down by a few percentage points every year, it's probably now maybe like 35%. It's definitely not the majority for most large advertisers anymore. And I don't see anything altering that. The things like, whether or not how bad cord cutting is, which is pretty bad, the capacity of television to satisfy reach and frequency-based goals, that gets harder and harder every year. It's a challenging medium to work with. That doesn't help. But I'd argue that that's not as much of a factor in causing the decline as just the sentimental reasons among incumbent advertisers as to why they shift their budgets, and the creative destruction issue in the overall economy.
What about connected TV? Is that in your definition or is that
Exactly.
outside of it?
Uh,
Yeah.
yeah. So I think that most marketers would basically say if it's professional content, then it's television. If it's not, and YouTube is funny because I think there are relatively few marketers who would budget for YouTube as part of their TV budget. Some, but not very many. It's a small share, I think, of their total pool of money, and that's independent of whether it should be. The perception is that YouTube is all cats on skateboards. Well, let me tell you, those cats don't work for free. The amount of money that YouTube spends on content dwarfs almost every TV network, right? It's just not perceived to be the same. And so let's put that to a side. And frankly, YouTube's better off for not being part of the TV conversation as much as they might want it to be, because at the end of the day, TV as a line item is just shrinking, whereas Meta and Google and Amazon and TikTok for now, they are line items on media plans that are growing and taking share. So television collectively, including connected TV, just continually will lose share of the overall ad market.
So digital, however you might define that, only continues and continues to get bigger and bigger and bigger, and there's kind of no stopping it. I wonder if there's a creative destruction element that comes in there. Um,
Maybe, but if we model this out as I do to even 2028, there's still room to go. Like where in 2028, maybe it's 3/4 of all advertising from 66% now. Like it adds a couple percentage points every year, and there's still more room to go. But then it's worth saying, well, what's next?
no, you're right. It's kind of like, jumping on the scale and you see a pound or two, and you've got to either do something about it or deal with the fact that you're putting on weight.
Well, I
Um,
think that you know, the next range of creative destruction, you have to start thinking about things like, I don't know, maybe the whole notion of the metaverse. It wasn't like it wasn't a possibility, just not anytime soon, right? But let's just assume that those products get sorted and that yeah, we do decide that let's go into the matrix and stay there. It'll be nice and warm and comfy, and just why would we ever leave our cocoons? I don't want to know what's going on in the outside world. And so let's just assume that humanity decides to do that in say 10 years. What would advertising look like? I mean, very different, right? I mean, and that's the sort of like something that you can hardly, you can sort of imagine. I mean, go back to the 1980s and the visions that were put forward about the interactive future were, I mean, people were talking about kind of what we got uh, once the World Wide Web came into existence. I don't think we could have fully anticipated, how it was going to play out for so-called, traditional media. But I think my only issue is that something like a metaverse, for a metaverse to be meaningfully impactful, it has to alter human behavior in a really meaningful way. And although we can imagine what that is, I mean, notwithstanding the success of, Apple's product and I guess Meta's product too in that space, um, it's just hard to imagine it really replacing a lot of human activity. And that's therefore equally hard, I think, to imagine meaningful changes in terms of, economies around it at this time, at least.
You mentioned something else very just in passing. Any thoughts on TikTok that you want to share?
Well, as of today, there was momentum. What was it? Only last week, 2 weeks ago, where the House passed a bill. Nothing's happened with the Senate, right? So it depends. I think that it has long felt that there's an inevitability that TikTok would be banned in the US on national security grounds. And it doesn't matter whether or not there is an issue. And I think it's certainly what's in the public domain conveys that it's less about what has happened and more about what can happen. Pair that with the very, hawkish mood in political circles and based on what we can read in national security circles with respect to China, it's not hard to see this play out. I've been arguing this certainly going back to when this first came up in India, before it even hit in the US.
And that happened very swiftly.
Yeah, yeah. But I mean, in 2020, it seemed really likely that something would happen, and it didn't, right? And then things kind of quieted down. I mean, while TikTok just grew rapidly, uh, it's it's really, really hard, I think, for an outsider to know. I mean, obviously, for people who are inside, clearly TikTok was caught completely by surprise by what happened with the House actions, last month. And so, what will happen and when, I don't know. But the long-term outcome seems kind of predictable. It's just the pathway that everyone gets there. Now, to be clear, um, the scenarios I can imagine which would alleviate this only involve TikTok finding a way to sell itself, not the US, because that makes almost no sense, but actually separating fully from ByteDance. Now there the issue is, well, okay, now they've got to invest in new infrastructure, new tools, new products, blah, blah, blah. That there can be that sort of a face-saving but expensive pathway that could allow it to continue. But the status quo, can't imagine it persisting inevitably for the ongoing future.
And do you see that affecting any of your advertising estimates or?
It doesn't impact the overall market as far as I can tell. It would impact where money goes. So, and this is where it's worth thinking through what the consequences are in the US. And it's not like they release public data, but there's press reports and we have to kind of read between the lines in terms of what the numbers mean. At this moment, I'm persuaded that my $6 billion estimate for advertising in the US is probably the right one. $16 billion would refer to, if it's a US number, would refer to a gross revenue number, including any commerce activity, tipping, anything else that they do that's not advertising. So not really the right number, but six from last year and probably growing 30-40%. So, decent money. If that went away, if TikTok went away, it could go to Instagram and the rest of Facebook. It could go to YouTube. It could go to Snap. It could go to Pinterest. I think that it mostly depends on what those entities do to try to capture the money. If one of them created a new partner program with really generous revenue splits for formerly TikTok-centric influencers and creators, I think they'd see an outsized share of the spending too.
Well, maybe you should also advise some of them. But there's another. We would be remiss not to talk about some of the political spending. And again, this might be a perception reality thing, because I think that there's a perception that that there's more spending this year than there ever has been historically. Yet you refute that.
So far, and I think there's reasons why we can point to, to be clear, I am saying there's more spending, just not growing as fast as I thought it might. To be clear, we're talking, if political advertising in the United States were a country, it would be one of the largest ad markets on earth, right? And it's still stunning how much money is involved in political advertising. But no, I think that I've generally assumed growth rate that might be, 20% or more every 4-year cycle. But right now it's like 2023, it definitely was, from what we can see, it was positive. It was up versus 19, but not by as much as I expected. And so I did tweak those numbers down a bit. But I think there'll still be growth over both, 2020 and 2022. The issue is it's just a function of, you don't have in the presidential elections, you don't have competitive primaries. I think it seems like you don't have as much competition going on, in other races, and so that just reduces the amount of money. Now, with that said, what's interesting is, and I haven't fully thought this through, but I find it interesting to see how much money is raised at the national level. And I do wonder if, most of the modeling I do is really focusing on how much money goes to local media, that's local broadcasting in particular, but certainly outdoor as well, and audio. I do have a number it makes an estimate for digital advertising, because you can obviously target locally. Television is in an interesting position to capture more money, especially as national elements play into more races. And yes, we only really care about, if you're trying to handicap the federal election, at least, it really is only a small number of states where, where the race gets decided. But there's probably a growing role for national media. It's small right now. Fox News probably is the biggest single beneficiary, but I think CNN also sees some. MSNBC might see some money, and so there might be some interesting, modest, but upside for some of the sellers of national TV from the election, because of the increasing nationalization of politics.
Well, we'll have to see. Any other things that you'd like to talk about from this report that you've done, or are there any other were there any other kind of surprises little kernels of surprise that you were starting to see?
Oh, I mean, I think we've hit on most of them, but we got to save something for the subscribers.
Absolutely, absolutely. Well, as always, you you've kept my head spinning, but you've also made some things a lot clearer. And it's always a pleasure to talk to you. And I think everybody should stay tuned to see what you have to say next. So thank you so much.
Thank you very much for having me.
The Internationalist focuses on the continual reinvention of marketing by highlighting inspirational marketers around the world and their ideas as they move the industry forward. Internationalist Marketing TV shares these perspectives through interviews and personal stories. Thanks so much for watching. If you find this kind of content helpful, please click like or subscribe. Again, thanks so much.